So everybody and their grandmother knows at this point that there's very high inflation and the Fed has to do something about it. They're planning on raising rates, maybe 3 or 4 rate hikes in 2022, with one as early as March. That's in 2 months from now, guys. So they're doing that. They're tapering, and we have to break down what I'm personally doing right now to prepare for what's going on and a potential stock market that could be heavily in the red very soon here. Potentially, right? So if you guys find value in the video, hit the like button, subscribe, join my Patreon if you want all my moves in the markets plus more. That's linked down below. And get yourself 2 stocks from Webull and $50 from M1 Finance. All that is also linked down below. And with that being said, let's get into it. So like I said, guys, there's a record level. Well, it's not a record level of inflation, I guess, but inflation is at 40-year highs right now, which is just ridiculous. It's insane, right? And the Fed has to come in and combat this. And I've been on record saying, I think it was in the last video, I was talking about how even if they raise the Fed funds rate a couple of times, 25 basis points here, 50 here, it's still going to be 1%. I mean, 1.25%. I mean, at the end of the day, that's not that crazy whatsoever, especially with inflation in 2021 being 7%, the highest it's ever been, or it's been in 40 years. So that's nothing because the real rate of inflation or the real interest rate is still negative. People are still losing money, even if they raise in terms of their savings, even if they raise the Fed funds rate to 1%. What the heck's a measly 1%, right? When we're seeing inflation of 7, 8, 9, maybe even more than that percentage points if they counted everything. So that's one thing worth mentioning here for sure. And when it comes to my strategy, guys, look, I'm in a lot of growth stocks right now. You all know that, especially my Patreon. You know, I've been buying growth stocks over the past couple of months, especially, earlier in 2021 and, of course, before that. And I've also now, in the past couple of months, been buying P or low P stocks, lower P stocks in general that pay a nice dividend because, yes, I'm in growth stocks. I love my growth stocks. I'm not going to freak out and sell them here because we're seeing volatility and some selling. I'm not going to do that, but I am going to bring in some more diversity by buying stocks that we're going to talk about here in a second with a lower P and a nice dividend because stocks that have higher multiples, and we've seen this for months at this point already leading up to this point, and it could get worse, right? Stocks with higher multiples, they get hit harder when we're seeing interest rates going up, right? It's simple as that. The money that these companies are borrowing to grow, the money they're borrowing to grow as fast as they're growing, it becomes more expensive. So their valuations get cut when interest rates go up. We've talked about this before, and we've been seeing this, right? I mean, we've seen this with a lot of growth stocks. So I'm looking to just, again, diversify, weather the storm with some more low PE, less volatile stocks like Intel. I've been buying this thing left and right recently, and I first started buying it not just a week or two ago. I actually started buying this back in October. I've been buying this thing for a couple of months now, and I think my average is probably between my two accounts I own it, maybe like a 53, something like that. I have to double check, do the math. But I'm in Intel right now. They have a 10.6 PE, which is very low. That's lower than the overall markets by a long shot. And they pay a 2.5% dividend yield, which I personally, I'm not I don't just invest in a stock for the dividend per se. The dividend's great, and I'm not an investor that's all just for dividend stocks. But when a company pays a dividend, you like the company, the numbers are good, the financials are good, the P is great. A dividend's like an icing on top, the icing on top, and I love it. I can't complain, right? I can't complain, guys. So Intel, I've been buying that one to kind of weather the storm, and the proof's in the pudding, guys. Look, recently as the markets have been volatile, we've been selling off, growth stocks have been getting killed. Intel has been going up or just maintaining its value, which is what I want, something to stable or weather the storm. It's less volatile, and it pays a dividend. The icing on top, right? Another one I've been buying is SWBI, Smith & Wesson. This is one that ran up to $40 a couple of months ago, which is insane, and now it's back to earth, $17. And I started buying this one about a month ago, probably give or take a week, right around there. And this is one that has a PE of a 3.2, which is just ridiculously low. I mean, it's just nuts. That is a very low PE, 3.2 PE, and they do pay a dividend, not as juicy as Intel's 2.5%, but they do pay a 1.8% dividend, which I cannot complain. And this is one that has been, like Intel, weathering the storm for me. Literally, guys, over the past couple of weeks, as the markets have been seeing more volatility, selling off, you guys know what I'm talking about, SWBI has done nothing in either direction. It's been flat, it's been consolidating, which is great. That's perfect, considering I bought it after it tanked from 23 to about 15. And in fact, I'm actually up on my position. I think my average is like 17.20 or something like that. So I'm up on SWBI right now. XLE is another one that I've been buying for many months on months. I mean, this might be a position that I started close to a year ago, no joke. And my average in XLE is around a 50, 52, or maybe even 51 actually. So I've been screaming oil. I mean, I've been screaming energy, guys, on this channel for months, and I've been telling you that I'm in XLE, and I think it was going to go over 60. And look, guys, we're in the mid 60s now. And I mean, you guys know that I've been following my channel, that I'm not BSing right now. I've been watching this, and I'm in it, and they pay a nice 3.9% dividend. It's not an energy stock, it's an energy ETF. So it owns a bunch of the big energy names out there: Exxon, Chevron, BP. I mean, a bunch of them. So I love it. I'm in. I'm up a ton, and they pay a nice dividend. Cannot complain. And I've recently now, over the past week, 2 weeks, 3 weeks even, I've been doing a lot of research, and I bought 2 real estate investment trusts. One of them I bought, when I'm filming this video this week today, and the other one I bought last week, and I've been buying it up until today. And the number one is Vici, VICI. This is the one that I've been buying. My more, I didn't own it before. The next one we'll talk about, I used to own. Sold it. Now I rebought it. Vici it's a real estate investment trust, and you guys know these pay nice dividends. This one pays a 5% dividend right now. And I made a video on REITs. Go watch that. Type in REITs, STAS, Surfes in the search bar. It'll pop up. We talk more about it, but in a nutshell, they own a lot of gaming properties. Think casinos, hotels. They own a lot of the real estate in Las Vegas and in other places around the country. They also own a bunch of golf courses. They're making more golf courses. So this is an interesting REIT. I did my research on it. I like it, and I initiated a position recently, and it pays about 5%. And again, go check out that REIT video if you guys want to. And the next one here is Realty Income. This is the one that I owned. I think I started buying this maybe 2017, 2018. I sold out of it maybe in 2020. That's what I did. Yes, that's right, because I got nervous about commercial real estate and what Realty Income owned, the real estate, which it's like 7-Elevens, Walgreens, stuff like that, which in reality I shouldn't have freaked out, and I didn't necessarily freak out, but I shouldn't have just got out of it because of that. But hindsight's 2020, of course, guys. But in that moment in time, in 2020, I believe it was, during the whole craziness, I sold out of Realty Income, and now I'm back in, which goes to show you shouldn't sell, during turmoil. I didn't sell at the bottom. It's not like I sold it at $38 where it bottomed down in 2020, but I think I sold it on the rebound. So you guys can see it hit 38. It started rebounding back to 55, 60. I think that's where I ended up dumping it, and now I'm rebuying it at 70, which it's okay. I mean, things happen, it's not the end of the world, and now I'm buying it again. 4.1% dividend, and this one pays monthly. So the biggest thing I've been doing, guys, is just adding some more diversity to my portfolio. Some of you guys might not agree with that. You might think having just 2 or 3 stocks is the way to go. Everyone, to each their own, right? But for me, I've been doing this. It's been working. It's been weathering the storm recently, and it's been creating some cash flow. Some nice dividend income, and I haven't been taking this dividend income out. I've just been reinvesting it, and that's what I'm going to be doing. And on top of that, I've been keeping a little bit more cash than usual these days. Just in case we do get a big dump when they hike interest rates a couple of times, which I think we probably will. I'm not saying we're going to crash 30%, but we might be going down 10, 15%. We might see multiple 5, 10% dumps throughout the year. I mean, that's not unlikely. In fact, it's probably likely, considering we're tapering, the interest rate hikes are coming, we're quantitative, we're not doing QE anymore, we're now doing QT, tightening. So it's going to be crazy. And that's it. We're going to wrap it up there. We talked a lot. I feel like I've been talking for 30 minutes, but the video is only 10 minutes long. That's a good sign. That's a good sign right there, guys. So if you all found value in the video, hit the like button, subscribe, drop me a comment, and join my Patreon. If you want all my buys, sells, call-outs, morning update videos, more access to me throughout the day, that's the best way to get that. It's linked down below, or you can go to StockSurfFest.com/Patreon. Make sure to also get your 2 stocks from Webull and your $50 free from M1 Finance, linked down below. And with that being said, hope you guys have a great rest of your day. Happy Friday. I'll catch you all in the next video. Have a great one. Peace out.